All right, folks. Today is February the 24th. We're looking at the end of the markets. Markets got beat up pretty bad today. Dow was down 3.6%. S&P 500 down 3.4%. NASDAQ was down the most, 3.7%. Small caps down 2.8%. So looks like we were down last Thursday. We were down Friday. We're down today. Hopefully we're not down tomorrow. If we are down tomorrow or anytime this week, I think we have another 2% at most to go. And I'm getting this information from my buddy K. Kim from over the weekend. So sometime today we'll go over K. Kim's what he's seeing, and I'll try to explain to you what's going on. So yes, this was a nasty pullback, but you can't go higher. You can't continue to go higher without occasional pullbacks like this. So some people look at it as we got beat up pretty bad. I look at it as a blessing so that we can go higher, a temporary setback so we can go higher. Let's look at some charts. Okay, we're looking at USO, which is US oil. US oil was down 3.76%. So US oil, Friday it was right at its 100 or Friday it was right at its 20-day moving average, but it's below that now. Remember what I was saying, if oil doesn't continue to go up, markets will be down. Hopefully now you see the correlation between oil and the stock markets. If oil starts going up, stock markets will go up. Oil goes down, stock markets will be down. You see oil was down minus 3.78%. Markets were down almost minus 3.8%. Let's look at SPY. SPY. Okay, so SPY finished between its 50-day moving average and its 100-day moving average. It finished like exactly right in the middle. So next place we expect it to stop, if it continues to go lower, would be 320. If it goes below 320, we expect it to hit about the 318 area. So it might have another 1% down to go. We'll keep an eye on it. Let's look at QQQ. QQQ, remember, was doing better than everybody. QQQ finished at its 50-day moving average. So let's look for some past history. It hit its 50-day moving average one time. It's rare that it hit its 50-day moving average in the last few months. The time before that was in October of last year. September, October area. August, September, October area. Where it's hitting its 50-day moving average or 100-day moving average. Before that, it was June. And then before that, it would have been last February. On its way up, it would have been December. On its way down. So if it falls below its 50-day moving average, which is 221, it's headed down to 212 area. So that's another, what is that? Another 5% down. We don't think it's going to fall that way, that much this time. I expect it to go down as far as 216. 216 looks like the next spot, which is maybe another 2 or 3% down. So we're looking at 216 to 212 are our next stops. Remember that for QQQ, 216 to 212. There's a reason why I say that. The volume is higher at the bottom for selling. That could indicate that we have more selling to go. So you look at Thursday selling, it had moderate volume. Friday selling had some increased buying or selling, some increased volume. Today, there was a lot of volume on that sale, a lot of volume. So it could be indication that more selling is to come. We're not going to worry about that. I'm going to show you here in a few minutes where we think this is headed on a different chart. Let's look at Dow Jones, DJI. Dow Jones finished below its 100-day moving average. This is a perfect example for why we're not panicking yet. The green line is the 20-day moving average. The red line is the 50-day moving average. The black line is the 100-day moving average. So even though it finished below its 100-day moving average today, the 20-day moving average is still higher than the 50-day. 50-day is still higher than the 100-day. So that still tells us the trend is up. Dow Jones, next stop could be 27,750 if it continues to go down. Most definitely 27,250 if it goes down more. 26,500 range. Okay. IWM finished right below its 100-day moving average. You see, the last time we got to that 100-day moving average was the beginning of February, where you see the red line at. So February this year, first time we got to the 100-day moving average. If it continues to go down, we're looking for it to go down to probably the first spot is 158, and then maybe down to 152, 146 area. Last time I was at 146 was back in August, June, April. Last February, it was in this area. Before that, before that, yeah, it would have been the end of 2018. Oh no, 2019. Yeah. So it's been a while since it's been in this area. I do expect it to go up, but if not, we know about where it's headed at. Right now, we're not panicking. Okay, let me look at, we're going to go over to K Kim. K Kim's last video. And he's going to tell us about where he expected us to end SPY. And we'll look at SPY and NASDAQ. Okay, this is K Kim's last video from the 22nd. What he's saying is for SPY might get down to the 315 area. He expects it to hit the maybe 320 area, 321 area before bouncing back. Worst case, it'll get down to 315. Let's look at QQQ. Okay, K Kim's thinking that QQQ could get down to 221. If it gets below 221, we're looking at about 216. So that's just something to keep in mind. So that'll be what? That'll be still another 2 or 3% down from where we are. Thank you for watching. Thank you for having patience. I am scrambling, trying to learn these charting patterns. They are a bit challenging to try to learn. So amongst all my other things, I'm trying to learn the charting patterns. Thanks for having patience. This year, I still expect the average person to finish with a 16% gain. Harbor Capital, I'm still expecting to finish between 25% and a 30% gain. So right now we position to Harbor Capital. Last week, we got up to a 4% return altogether. We've given all of that back, and we've lost maybe up to 2% today. So today we're probably sitting at minus 2% after the markets. So far, the futures are up a little bit. They're not getting beat up too bad. I still expect to finish in the 20% range this year. 20 to 25%. We should be about 5% behind Harbor Capital is my goal. Because with Harbor Capital losing 4% today, well, with QQQ losing 4%, Harbor Capital probably lost about 6%. When it lost 6%, that should put it at about a 4% return for the year versus our minus 2% return. So we should be like about 6% behind it. Last week, we were about 9% behind it. So we moved over to 100% Harbor Capital. We'll go from there. Most of the year, we're going to stick with 100% Harbor Capital because we like how it performs versus everybody else. And we do know this year they are going to be pumping these markets up to continue to hit new all-time highs. So for right now, we're not panicking in our camp. Thank you for watching. Like, share, comment, and subscribe. Later.